G'day ladies and gentlemen, welcome back to another Bitcoin video. We've got around 18 hours until the monthly candle close. We've discussed in the last two videos the importance of that monthly candle level. We'll look into it a bit today for those of you who aren't familiar with it, but it's a pretty important close. We've also got 36 hours until the FOMC decision, and that's obviously going to stir up volatility in the market quite a lot and cause some drastic price action changes and potentially trigger the next move. And so based on that, we need to look into the short-term levels as well, where that move will be, where it's likely to go. And then lastly, and probably the most important thing, we have a level on Bitcoin that I've identified as a critical rejection zone, right? This is a level in which three very important indicators, very strong indicators, are converging very closely together. Bitcoin's rapidly approaching that level, and if we hit our head on that level and go back down, that could spell an end to this bullish move here. And I think the bottom is in. I think the macro move's still going to be bullish, but it definitely would lead to a substantial rejection. And a substantial correction, I should say, as well. So, big things to look into, especially that last point that I made. Without further ado, check out the VIP group. Got the results down there in the pinned comment. You can check all that out. We trade altcoins sub-daily in the VIP group, doing really well, pulling in massive profits. Check it out. Without further ado, let's get into the video. So starting off with short-term price action on Bitcoin, looking at the daily chart, we can see that Bitcoin's made a move upwards. It's consolidating now. It's consolidating within a zone between two pink levels. That zone and the major part of that zone that I'm identifying is between 21.9K and 23.8K. Both 21.9K and 23.8K are very major levels. We can go back to all the way here in 2020 and actually see how important these levels have been. It was the top and bottom of this range here before the bull market really started to kick off, right? So if we extend that across these two pink zones and look at what we are doing in the current range, we can see that we're actually in the same range. We're in the same range we were on Bitcoin in 2020 and early 2021, just before the major part of the bull market. And this range is very important for that reason, right? And so we are looking at the same levels. We're looking at a break to the upside at 23.8K. 23.8K will lead to a move to the upside, okay? An extended move. And a break to the downside below 21.9K will lead to an extended move to the downside. Now, you know, I've got the RSI channel there to support that, but I suppose the big question everyone's asking is, well, what is more likely? And if we break to the upside, where will we go? And if we break to the downside, where will we go, right? If we break to the downside, it's very clear where we go. The next support level below 21.9K, quite simply put, is down here in this green box, okay? And that green box, if we're looking at the daily chart, is down here at around 19K, right? 19.5K to 20K. That is where we would go if we break to the downside below 21.9K. If we break to the upside, it's a little bit more complicated. And the reason it's more complicated is this. From a horizontal perspective, from a horizontal resistance and support perspective, if we break to the upside at 23.8K, we realistically should be going straight to around 28.6. But it's not that simple, okay? Obviously, it's not that simple because there's a huge gap there. There has to be something in between, and there very much is something in between. And that is, looking at the weekly chart, these three moving averages, okay? We have the weekly chart here. We're zooming in. We're looking at the wedge breakout we've seen over the last, a few days here in the last weekly candle close. We're broken out of the wedge. We're moving to the upside. Yesterday's video was all about that wedge, all about how the next macro target is 28.6K. However, it's not that simple because we have three major moving averages. We have in the red, the 50-week SMA. We have in the blue here, the 200-week EMA. We have in the green, the 200-week SMA. Three very important moving averages, all converging into the same spot at 25K, making that an incredibly tough resistance zone. 25K on Bitcoin is an incredibly strong resistance zone. I'm calling that the major rejection zone on Bitcoin. That's what I'm going to be calling it until we get above it. Major rejection zone. That is literally a massive hurdle. We have no, look, all you need to do is look at the charts to understand how big this hurdle is. The 50-week SMA, major support, bounced off it many times. 200 EMA, same thing. 200 SMA, same thing. Look through this chart here. Look at the green line. Look how many bounces we've had off it. Look at the blue line. Look how many bounces and rejections. Red line, same thing. These lines are major. They're major resistance zones. And if all three of them are converging in one spot, that makes a major rejection zone. That is the place in which people should be watching out for, okay? For that reason, if you have not bought Bitcoin yet, for some reason, if you have not bought Bitcoin yet, you haven't gotten into Bitcoin yet, you're still waiting, I would not be touching Bitcoin until we get above 25K, above all three of those lines in that kind of pinpoint rejection zone. That is a major resistance. That's quite scary. Quite scary. Look, macro picture is still the same. Okay, so I can go on all day fear mongering about how major this rejection zone is, and it is major. The fact of the matter is this: we've bounced off 8-year support on Bitcoin. Okay, we've broken above bull market support band. We've broken above 200-day SMA. We've broken above, many major resistance lines, such as the 300-week SMA as well. All within the span of the 4-year cycle theory, while the DXY is dropping. Bitcoin, in my opinion, the bottom is in. This rejection zone could lead to an extensive consolidation, but in my opinion, it will not knock Bitcoin back down below support and back down to new lows. At the worst, this will knock Bitcoin down for a correction, and that correction might actually be healthy, so we can do something like this in the future, okay? So, look, it's a major zone. We have to keep an eye on it. 25K is the major level. And going back to what I was saying before, if we break below 21.9K, we'll go down to 19.5 to 20. If we break above 23.8, we will go and test 25K, which is the major zone we were looking at there with all three of those indicators. So incredibly important level at 25K. That is the upside target if we do break to the upside. But ultimately, regardless of all of this, just looking at TA as it is right now, it does look relatively likely in the short-term charts that we do see a correction regardless, and and that's before we even break above 23.8K. But again, it's looked like that for a long period of time, so it's kind of hard to say. The short-term TA hasn't really worked to a full point of accuracy as of recent weeks. I mean, we're very aware of that. This move has extended very, very much to the upside, way more than I thought it would, way more than anyone who was looking at short-term TA thought it would. So short-term TA isn't particularly reliable right now. I'm just waiting to see what happens with the range. I'm waiting to see where we go, whether it's above that pink line or below that bottom pink line. That's what I'm waiting for. I'm not going to try and make predictions within the range because the range is very indecisive right now. But ultimately, that's the major stuff that's going on. Monthly chart as well. I wanted to look into this briefly. We've got 18 hours until the monthly candle close. We have a pink support level on the monthly chart RSI. We're just peeking our head above it right now. And if we close the monthly candle above that support level on the RSI, that would be excellent. And that would be a close above, say, 22K. So provided we get above, it's very hard to say exactly where it would be. I'm estimating. But provided we close above, say, 22K, somewhere around there, that's a bullish monthly candle close. And even if we don't get above 22K in the monthly candle, it's still bullish because we're still breaking above this red line, which acted as resistance from 2017, and we're still forming a bullish engulfing candle on the monthly chart regardless. But it would be good to see a monthly candle close above, say, 22K for reasons of the RSI. And then ultimately, of course, and this is something we'll look into a lot more tomorrow, ultimately, of course, we've got the FOMC decision in 36 hours, which is going to toss up volatility. And if we haven't moved out of the short-term range by then, we will be doing that at that point in time. So FOMC will likely trigger a move out of the short-term range if we haven't done so by the next 36 hours. So lots to look at. 25K rejection zone, very important. That's something we're going to be very closely monitoring over the next few weeks and maybe even months. It depends how long it takes to get above it. We're really in no rush. The 4-year cycle theory doesn't necessarily say we have to move above 28.6K until as late as September this year. So we've got months. We've got like 9 months to get above 30K according to the 4-year cycle theory. And that's a rough estimate as well. I haven't actually looked at the data this morning. I'm off the top of my head, I think that's what it was, right? So the point is, we've got plenty of time, but it is something we definitely need to watch. So we'll keep an eye on it. Without further ado, I want to look at a few things before we end the video. Please stick around. So you can sign up to the Bitget Exchange using my referral link in the pinned comment description. It's the best way to help the channel. You get a 15% discount on trading fees on top of the already 5 times lower fees than Binance on the Bitget Exchange. Cheapest exchange I've found in the cryptocurrency market. It's also semi-decentralized, which means you don't have to KYC, which means you're avoiding government regulation with this exchange, which is the fundamental purpose of cryptocurrency. Also meaning you can sign up globally. It's got a protection fund as well. It's got hundreds of $1 million in assets in reserve so that if the exchange does get hacked and something like FTX happens to this exchange, you can actually get reimbursed in your funds. Sign up using my referral link. That's the best way you can help out the channel and help out yourself as a trader. And then also, if you want to learn how to trade, you want to help yourself further, you can check out the Crypto Academy, the 10-unit Become a Trader course developed by myself and Mega Crypto. We teach people how to trade in this course. We also teach people fundamental concept of cryptocurrency, indicators, market patterns, candlestick patterns, market psychology, all that stuff, how to find trades. So check that out on the website in the pinned comment and description. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you tomorrow.